The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour right here on TFNN. And don't forget, you can check us out online on your mobile phone at tfnn.mobi. Let's check out where the markets are at right now. We are, S&P is flat. And something I talked about earlier this morning in the Bull Bear Binary Hour, we talked about it a little bit earlier this week, and it's happening again, okay, is when you get a massive move day, it is not abnormal to expect a very flat day, okay? Again, on a flat day, you go in there and we'll define what a flat day is. We'll define what a big move day is. We'll maybe even pull some charts up and look at that back and forth. Looking over at the S&P. The S&P is right now looking at a couple different things. I have a person looking at the scalp trading methods, a lot of cool scalp trades you can do. Looking at the S&P. The S&P is 1865.75 right now. It's down 1.5. We have the Russell is down 5. Nasdaq's currently down 10 points, with the Dow down 23. Again, very flat on the indices. Looking on over at copper. Copper is, what is it? About 0.003. We got gold is 40 cents, 40 whole cents. We got silver is down about 0.75%. Natural gas down over 0.5%. Oil's up over 0.5%. We got corn up a few bucks, and we got soybeans barely moving at all, just down a few dollars. We on our euro dollar. It did have some movement earlier. Right now, it's just down 7 pips. It's pulled on back. We got the Aussie dollar is up 14. Pound dollar call is up 37. Dollar franc is up 2. Dollar CAD is down 9. Dollar yen is down 13. Looking at the Aussie yen is up 2. The euro yen is down 20. Pound yen is up 38. Euro pound is down 22 ticks on the day. That catches us up on where everything is and how the markets work. Looking at a few different things on the market. We didn't really have a lot happening, but I did bring this up. I want to show this again just to try to help y'all out and understand this whole seasonal cycle, implied volatility, see when the market's turning type thing. When should a correction happen? Okay? On the left side, I have the VIX, the volatility index, really for the S&P 500. So I guess if I want to get really just on track, we could pull up the SPX. All right, and so the VIX is for the SPX, and we were at a very, very low point on the VIX. We were down to 12, so right now we're up at about 13. And on the daily close there, and talked about a couple days ago. It's like, hey, VIX is really low. This thing's gonna back on out. And if I go up and I open another chart over here, we look at the VIX. And I back this thing out to, I want to say, like, weekly bars. Okay, I just want you to see, over the years, this is like 12 is a low point. Okay? So it's a very, very, very low level on the VIX whenever we're down to like 12. Which usually means that the market has no fear in it. Okay? Which is good to a certain point, but that also means, less risk takers. What that also means is people are not aggressively buying above. At a certain point, when it gets down to this point, you get that aggressive buyer back off. Okay? They're not aggressively, like when there's no fear, it's because people are in a position and they're very positive. They didn't just get in. They've been making money on a nice move up. And they just don't see any reason why it's going to go down. They're, everything's all roses and everything, and they're up, and they got green, 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 and they're just all happy. Okay, they're not buying options to protect their positions, their profits. This is the exact time you should be buying options, because this is when they're cheap to protect your positions. And when it gets too far, okay, then that's when you get a correction. It doesn't mean we're going to pull back by 100% or 50% or, whatever, that type of thing. It just means expect a pullback, expect some speed, expect some volatility. And so we're like, oh, it's going to drop down, it's going to pull on back up. Boom. You see how the seasonal cycle, the VIX shoots up. Well, at the exact same time here, the S&P shooting down, and look at how we see the S&P shoot down right into about the third week of June. So from now to about, the next, I guess 5 weeks, seasonally, it's a down move. Now, there are a couple weeks in there that are going to seesaw. Okay, so be aware. That doesn't mean straight down for the next 5 weeks. It doesn't mean we should end lower about 5 weeks than we are right now. Where does that put us over here on the VIX cycle? Okay, on the VIX cycle, right there about the same time. See how a little bit of seesaw going on? Right there about the same time. That's when it starts dropping on back down. VIX got high. It stayed high a little too long. And it's moving up. So what does high mean? Well, we got to see what high means for now. But we're probably going to see the VIX hit about 17. Okay? So it'll probably go somewhere up in this range. And when it does, that's when, you should start looking out. Because eventually it's going to turn back around and we're going to see another pop in the market. We're going to pop on back up. But, this is a very good way if you're like hedging a portfolio. When you see the VIX get really high, that's when you put your options on. Okay? They're very cheap. Market drops on you over maybe a 4 or 5 week period. Maybe you buy out 2 or 3 months. You get a nice big move that drops down. Not only do you make money on your options dropping, but implied volatility also increases the value of those options. And then as you see the VIX starting to back off a little bit, okay, market's starting to turn around, you take those options off. Okay, then you use stops. All right, let the market move back up. And now you made money down on the options. You had your stocks on. Your futures, held positions, your, forwards, whatever it is you're doing, it starts flying on back up. And this is how you really, make money trading, okay, in your stocks. And you can also, there's a lot of cool things you can do with this. As that happens, as it moves up, another thing you can do is if it does get really cheap again, you can also layer some of those on just to protect your position. And that's where like deviation moves and things come into place. But like on, maybe daily, weekly basis. But you can go in and you can actually layer in options. And as the market does pull back, guess what? Not only did you make that money, so you can take some out while you're holding your stock, but you could choose to take that money and reinvest it and buy more shares and grow your position on the oscillations. Okay? So it drops down. You see VIX backing off. You then buy, you basically, close out your puts, take some of that cash. You actually can put some in your pocket. You also can take some of that and grow your position size at a cheaper price, moves on back up, put on some more puts, comes back down, take them off, buy some at a cheaper price, and just ride the trends. Okay, ride the bounces right there. And use the VIX to help you do that. Use the seasonal cycles to help you do that. Markets, going up right here. And, you just basically got to match them up. And you can look at, there's different seasonal cycles. We can look at like 1 year. We can look at 2 year to get a little bit smoother. We can look at 3 year. And which one do you look at? Well, I like to try to find the one that's going to be, and it'll be a little bit obviously smoothed out whenever the more years you add in. It's going to smooth that line out because it's averaging them. But I like to find the one that's going to match as much as possible to what I actually see happening, okay, like in the current year. So right here, I'm looking at this. It's going to start at January. I'm like, okay, well, it moved down. It wasn't massive, but it did. Then it moved up. Okay. Got a little bit moved down. Seasonally, we went choppy. Yeah, there's not really a lot happening right there. Then we get a pop-up. Okay, I see that. And then some chop in the middle of that. All right, one last pop-up. Now, we didn't have this drawdown that we had last year. Okay, or we had a drawdown this year that we hadn't had previously. Just let me know a little bit if we zoom in right there. Yeah, that's pretty good. And I mean, you may have to literally zoom in to see the correlation between the two. You're trying to find that best correlation you can. That's the whole point of seasonality. It doesn't mean that you trade it just because it's supposed to go up, or you trade it just because it's supposed to go down because that's what it's done. It means that's like where you may want to hedge a position, okay? Where you may want to take off that hedge to lock in a profit. So understanding, just looking at that implied volatility index, and the CBOE has a variety of them. It has them for gold, okay? I want to say it's GVZ. Maybe I'm right on that. Yeah. So there you go. There's your gold volatility index. And that's right there. So the CBOE gold ETF, so it's the GLD volatility index. And we can back that out. We can look at it over a period of time, like 1 year, 2 year, 3 year, and see what is the seasonal cycle on gold. So maybe you're a gold trader. You probably should be looking at the gold volatility index. Are things different than they were? If they're different than they have been, I mean, right here, this is a 5 year, by the way. I want to make sure I got that. But yeah, we're on a 5 year seasonal cycle. Look at this. GVZ, implied volatility going down, going up, going down, going up. Now we get this right here, we get a breaking point. So far, most of the year, we've been like the exact same. Down, up, down, up. Right about March, it diverged. And we saw it pop up. So notice all of a sudden we're diverging. Now we're going down, and seasonally it normally goes up. So that's a little bit different. That's a divergence in what we've seen over the last 5 years. And that can make it harder to trade, or you can trade the divergence. Okay, you're like, okay, well, seasonally, the GVZ goes up, but it's been going down. Then guess what? That means I should probably expect that, and until we get back recorrelated, because now we're opposite correlation. I should probably expect that somewhere around May 21st or so, that it'll pop back up. And what you'll usually see on these is it'll go down, then all of a sudden it'll get off, like it's not winding up. It'll come back up, okay, doing the opposite, and then all of a sudden you'll get it'll get back into correlation. So now we're basically the opposite of correlation on gold. All right, let's see here. We can look at a lot of different ones. And RVX, is it lined up? So it went down, went up, had a big spike right there, had that drawdown early in the year. Not a seasonal move. And then things pretty much got recorrelated for most of the year. We've been right on track, heading back up. This is normal. Look at that right there. I mean, the exact same time of year, May 12, the RVX for the last 5 years has went up. And done so until about May 20th, came back down, popped back up. It didn't really get back down low again till like July. So we got some volatility coming over the next 5 weeks. Get ready for it. All right, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And so we got the seasonality, we got the Russell. We can go through them, and you can just pull up one after another. They got these on Apple, okay? The Apple Volatility Index. Let's see, what is that? We'll look it up. Look up. Oh, let's see here. Volatility Index. What is? I think Thinkorswim has that in there. They got NASDAQ, they got gold, they got Brazil, oil, euro, dollar. Not sure if they have the Apple one or not. Emerging markets. Yeah, crude oil. Okay. And you got VIX futures, crude oil volatility index, which is pretty interesting. Crude oil volatility index future. So there's all sorts of products out there. They got the new swaps coming out and everything else over on CME. There's a lot of new products coming out. But you want to understand more than anything, and what we're going through it here is you really want to get down. I don't know if that thing's ever going to load. May not be any data. So you want to really get down two things. One, low volatility days. How do you define them? How do you see them? One, look at what volume is normally. Okay, you can look at volume bars on daily bars. Can be one way to look at it. There's a lot of ways you can see it. Let me see. Let me pull the Russell up over here. And let me go in. and just look at a normal bar. Okay. Problem is, and here's the challenge, right? When you're looking at this, it's like, well, what? The day's not over. So how can I tell you if it's a high volatility day? Overall, how can I tell you it's a high volatility day until the day's done? That's why I have to look intraday, and that's why I like expected volume. Because if I go over here and I'm looking at expectations and volume, as you can see right here, what's my expected volume for each day, minute, hour, etc., then I actually have the ability to tell whether or not this is a low volatility day. So looking at this chart right here, I can see, hey, you know what? We're not exceeding volume. We're not even hitting expectations that often. I define that as like less than 1 out of 5. When that's happening, I expect chop. I expect the market to not really be moving. Okay? So I'm basically saying I don't think the market's going to move that fast. And what I'm doing right here, so how do I guess what I'm trying to get across to is how are you going to handle that? What are you going to do? Well, one, you're not going to go in and take a lot of big trend trades. If you do go in directionally, that's fine, but you better go in directionally to scalp, to get in and get out. Because you're going to pull up your magnet pricing. Like I gave you magnet pricing information yesterday on the S&P 500. You're going to pull that up. You're going to look at that. You're going to go, hey, what range are we in between? Are we staying inside that magnet range? Right? And that's where you can start playing your swings inside the magnets, back and forth, back and forth. You can look at expected ranges and see how we're staying like this perfectly inside of our expected ranges. More honestly, more than anything, we're staying inside of our close to closes. There's not a single hour today on the Russell that hasn't opened and closed with the expected close to close. Now, some of them came outside of it, but they all went right back inside the expected close. Every single one of them. So it's a chop day. If you start getting into trends, you're going to get in, you're going to get chopped out. You're going to get in, you're going to get chopped out. You're going to get in, you get chopped out. It's going to be pretty annoying. So if you do want to get in, grab a few bars, get out. Okay, or start playing the swings. Whenever you get like to a low on a high to low on a day that's low volume, that's a good time to look to go ahead and buy on back up. Let it go up to the end of the hour, get out of the way. Let it do its thing. Let it figure out what direction it wants to go. Comes on back down, sweet. Okay, buy on back in. This one moves up, starts moving back down. Not a lot of time in that one. So you got to start reading the markets a little bit. You got to see what's there. One of the traders I talked to, Steve, he defines basically a big move day in the Dow as about 75 points. Okay? And so what he'll do is he has a simple, a very cool trend strategy, and but it's based on pretty much that. Like that right there is a filter for it. Okay? And if he doesn't see, if the move's too big the day before, then that's not his ideal move. He'll play with it. He may go in. But his ideal setups, okay, are not days that follow 75% or more days. Or 75 point or more days. So we're going to go in and we're going to look at 75 point days when we get back from this. And we're going to see what the following day, what did it look like? All right. Stare there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So one of the ways to look at this, 75 points, obviously that's going to be a little bit low. And what I would do is I would tune that up, and I'd be more inclined to say what was a deviation for the day. So I'm going to go in here, and I'm going to add on. Let me see if this will be an easy method. I'm trying to calculate all this out without having to do a whole bunch of math. All right, let's see here. And let's go in, and because basically it's the whole idea is when it's a bigger than expected move day. Then that's the day to watch out for in the following day as being a very potentially flat day. Let's go in and let's try to calculate this in minutes, see if that'll work better. I'm going to pull up minutes. Indicator's not happy that I'm trying to pull that off. Yeah, that isn't working. Okay, let's try this. There we go. Alright, so how big will it let me get here? What is that, 720, 12 hours. Yeah, it won't let me go that. Okay, let's go down to, what about 300? 5 hours. Yep, indicator didn't like that. 240. Okay, that worked. All right, so I can still see, a day. So the idea is days where a full deviation move took place. That's what the blue line showed me, the highest point in a day. And so sort of wanting to know, if I try to do this, historically, live, am I going to be able to see all the data I want to see on here? That's still just a lot of data for it to load. Try it one more time. See if that'll work. Okay, so now I can sort of a lot easier look at this like day to day. So like yesterday, okay, we exceeded deviation move right here in this time frame, flat day. All right, so the deviation right there on the Dow can actually be used as a clue. So that gives you an idea on just the deviation move. Now, of course, you're looking at the 9:30 to 4 o'clock period there. But even with that, it may still be that. But I definitely got our 75 points. Let's go back. Let's go here. Okay, previous day, trending day, but did not hit a full deviation move. Okay. And we want to constantly find, okay, this was a full deviation day. We actually got a nice trend out of that day. That trade worked out well. Problem is, part of that happened early in the morning. And what we really want is 75 points. So I know it's going to make that indicator really mad when I try to measure it. But I'm going to have to go in either way. Do this the right way, because it's going to want 24/7 on it. But we're not going to be able to do that. If we want to do this the right way, what we're going to need is we need to really look at the regular trading hours. So let me go here. Let me go on over to regular trading hours. Hit apply. All right, I guess that's going to piss off the deviation indicator. That's okay. And I just want to see true 75-point moves. Then we're going to go in here and let me just pull that off, get it out of the way, click apply. And now, okay, there we go. So I went ahead and added an ATR on, plotting a line. I'm putting that right at 75 points. I set the ATR to a period of 1. So theoretically, that should actually tell me the high and the low. Let's see here. High, low. All right, so that's about 66 points. Let's see what this tells me. A little bit lower than that, 46. What do we get here? Yeah, let's see. Let me adjust the numbers. I want to see if I can. What I'm trying to do is make it where it'll tell us the measurement really, really fast. I might love to do these tests. You just got to. I'll probably spend about 20 minutes a lot of times putting together how to do the test. And you'll make everything else go a lot faster. Oh, yeah, I was just drawing. The drawing wasn't accurate. Okay, set it to minus 46. So let me see here. Let's pull up our calculator to make it easy. All right, and I'm just doing this for double check verification before I start flying through them. But if I go in there and go high minus low, and right here. Okay, and then what do we get down here? 40. Okay, good. It's working. All right, so we're getting 46 points. All right, so that's now what I've done is I just add an ATR of 1 on a daily bar, and I've chosen the regular trading hour session, not the extended hours. And then I plotted a line, okay, right at 75 points. This will then allow me to see a 75-point day, to be aware of a potential follow-up of a flat day. That's the whole idea. So every bar is a whole day. Right now it's 120 minutes. We got to bring it down to where every bar is 1 day from high to low. So now what we're going to do is we're going to bring it on down to days. And let's see here. So checking that out. Looks like 70 might be a little bit, 75 might be a little bit too, how do I put this? Too low. So, editing it around here, and we may have to bump that up a little bit. And by doing that, it looks like 3 out of 4 days are getting hit. So let's go over and let's look at the current deviation level that I post over on the screen. Okay? And I post them for basically what a one deviation move is on every market at about 8:30. And this is more of a what to expect during the day session. It has nothing to do with the night session. And so 75 point rule, you can tell that does definitely, there are it's definitely a swing point, but it's just not enough of a filter. It lets too many things come through. So what really defines a high volume day, or a high move day? The best way I can say that you could possibly do that is going to be looking on over at a deviation move, know what the true expected move was versus what happened, and what the average expected move is. So, a couple ways. One is we have just deviations themselves. So if I look at that right here, a deviation move on the Dow is going to give me about 88 points. Okay? So there we go. That actually does change our number a little bit. Let's adjust that. Let's just pop that up on to just what one deviation is right now. Okay? That moves our number up some. All right. Now as you notice, most days obviously do move that far. Very few don't, because that's the expected move. Now let's go into actually expected moves instead of implied volatilities. Let's go into expected moves based on right here, 1 day. See what we get. This may require us to go to default 24/7, by the way. Let's see if that will calculate out for me. If not, I'll go over. Try the optimized one. I got a new one here I'm playing with. All right. Expected range, optimized. Okay, yeah, we got that on there. That's going to require me to go over to default 24/7. I really want to play with that on the limited time frame. All right, let me see here. I guess I could change the data series up. See how much of it. That shouldn't make a massive difference most days. So, I mean, the overnight trading session on most days is not going to be the deal breaker. So let's look at it and see. Now, there is a way to rig around this, actually. You can go in, and it's sort of cool. You can actually change. You can update. So if I want to force something, okay, to plot for me, then the way that I can do that is I can go in here. Now, this is sort of interesting. It's not doing the 1440 right now. I can go in and force something to plot by choosing the default 24/7, but editing the default 24/7 session template. And that way I'm still within the requirements. Okay, so 60. So there is something going on there just on plot levels. We'll go in. Let's check out a little bit more. May need more data. Let's see, 365. No, that should be enough. That should be more than enough. Going to 120. See if any of this will make a difference. Just trying to get an idea on expectation of high to low. I bet I can do it inverted. So there's a lot of, there's some way to pull it off somehow. So here's my idea of what I can do is we're going to change up the concept. We're going to go in, and the real goal here, what we're trying to accomplish, and I'll continue this next week. We'll go into this in more detail. But what we're really trying to pull off is the ability to go in and look at how big a move was, how big the volume was, and how much that can help us forecast the expectation on a potentially flat move the next day, a choppy move. So it's really going to do us more good to test it out, to not just measure the height of the low, because that doesn't always tell you the picture, right? I mean, the market could fly up in a perfect trend, fly down in a perfect trend, and fly back up in a perfect trend, and be really smooth and great for trading. But at the same time, the market may not, it may literally just like chop, chop, chop all the way up, and chop, chop, chop all the way down, and chop, chop, chop all the way up, and be very, very difficult to trade. So it's not just the size of the move, it's what happens inside the bar on the move. And ultimately, that's what we want to see. We want to see, are we able to identify a potential, like really have a good idea, a good forecast of potential chop of the next day whenever there's a very large move. So if I go in here and I want to, maybe I like to, whatever you're trading, let's, I'm just going to throw on, let's say 5-minute bars for a moment. And then what I'm going to do is now I'm going to back out and see if this will let me pull this off. It might do 1440 now that I've backed down on the bars. And now I'm going to change my range back to what I wanted before, to 1440. Let's see if that'll plot for me. If that'll plot for me correctly. Okay, sweet. There we go. Then I can take my, let's see if it lets me add a 1-day Dow that I make invisible. If I could do that. There we go. New. And we're going to make it on days over here. I want to see if it'll allow the spacing, if it'll mess it up. We're going to go to the easiest way is to go to open, high, low, close, and I'm going to change my number over here to transparent to hide the bar. If that allows my bars to look nice and pretty, which it still is, I'm going to grab my ATR, I'm going to drop it on down here. I'm going to click on it, and I'm going to assign it, instead of looking at those 5-minute bars, we're going to tell it to look at the daily bars. Click OK on that, hit apply. And let's see if that, is it going to plot that for us? Yeah, it is. All right, now we got that. We still want that daily ATR on that regular trading session. But now, since I'm using the 5 minutes for my ranges, I'm going to go over here and I'm going to change this one to actually just give me, let's see if this will pull this off, regular trading hours. There we go. Okay, so now we're putting the pieces together. Added a daily with the regular trading hours and ATR on it. Added a smaller time frame so we can actually see the volatility. And now when we come back, we'll start putting the pieces together. All right, stay tuned. Be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, go on here to the Diagnostic Trading Hour. All right, so what we're doing, we're going through and checking out, looking at the Dow, and looking at, if it moves 35 points, what usually happens the next day? Can that be a predictor? Is it good or not? So we have 75 points, way greater than 75 points yesterday, and I think 75 is too low, like I said. I would really like to see, possibly a deviation break as possibly being the standard. I'm just trying to look at a couple different methods of other traders that have mentioned it to me. But we definitely exceeded a deviation. Yesterday we got a flat day. Okay? Today. Now the day before that we definitely exceeded that 75, that 85, points, whatever we were looking at. But the deviation on that day was... Let's see here exactly. We had a deviation move of 146. We got 134. We got to it, but right to the deviation perfectly, and got nice trending days. But we didn't break the deviation. Okay. Let's see here. Didn't really have much going on there. Got a little weekend gap. All right. So here's a day where we break the deviation. Right. You can see that little deviation line. We went more than the deviation. On on the expected range. I mean, 162, we moved to 138. And notice the next day, we had a little bump up there, but it is a flat day. Let's look at the previous day. Okay, overall right here. And trying to see if we broke the expected deviation move there. We did not break it all day. We got close. We got to like 153 out of 156 expected points. Did not break it. We had a nice range day the following day. And I'm less concerned about the range day as I am about is it going to help me on the chop days potentially or not. Let's see here. Looking at this day. This day looks like it broke it. We actually got a little break, like barely. So 167, 176. So about 10 ticks above or so. Did break it. You know, there's another way we can make it even easier. Right here, I can go in. And there's a trigger right over here. And I can set. One, I can make it actually visible. Like a lot more visible than it is. And let's make it like just obnoxiously visible. There we go. And let's make it a little thicker. Like 5 on there. All right. And make it a solid line. Or solid square, that's cleaner. And then we'll let's make it a little higher. That'll work a little right now. We got it at 75. Let's make it, say 110%. We hit apply. What's going to do is going to pop a line right above that deviation level so we can just really clearly see like if it hit that line. So that way I don't have to look at it. I don't have to get right down to it. I'm like, I'm going to put a little bit above. If I see the red above the blue, we got it. Okay? So that's what we're going to look for. We're going to go 110% break. So 110 break, flat day. Okay, now we can just start flying on this. All right, did not break 110. Did break, but did not break 110. So looking for the 110 break days. 110 break day, flat day. Okay, so we're 110% of the expected move. All right, this will be fun. We'll dive into this study more next week and just see if we can use this to 110 flat day. Look at that. If we can use it to predict flat days. Upcoming flat days. Lots of applications. Butterflies, range-bound trading, scalp trading, etc. And, all right. Well, y'all have a great day. We'll look at this next week.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.